Macroeconomist and Real Vision CEO Raoul Pal has been a vocal proponent of cryptocurrencies and other risk assets for some time now. Recently, he has been making headlines with his prediction that the bottom is in for the markets and that we are about to see an explosion in the price of crypto and other risk assets in the coming months. In this article, we will take a closer look at his prediction and what it could mean for investors. To understand Raoul Pal's prediction, we must first understand his background and expertise. Pal is a former hedge fund manager who worked for Goldman Sachs, GLG Partners, and other major financial institutions before launching his own research and media company, Real Vision. He is known for his macroeconomic analysis, which involves looking at global trends and events to understand how they will impact financial markets. Pal's prediction is based on a number of factors, including the ongoing COVID-19 pandemic, the Federal Reserve's monetary policy, and the rise of cryptocurrencies. According to Pal, the pandemic has created a unique economic environment in which central banks around the world are pumping trillions of dollars into the economy to keep it afloat. This has led to historically low interest rates and an abundance of liquidity in the markets. Pal believes that this excess liquidity, combined with a growing demand for alternative assets, will lead to an explosion in the price of cryptocurrencies and other risk assets. He argues that investors are becoming increasingly disillusioned with traditional assets like stocks and bonds, which are heavily influenced by central bank policy and can be volatile in times of economic uncertainty. As a result, many are turning to cryptocurrencies and other alternative assets as a way to diversify their portfolios and protect against inflation. Pal's prediction is not without its skeptics, however. Some experts have pointed out that the crypto market is notoriously volatile and subject to sudden shifts in sentiment. Others have argued that the current economic environment is unsustainable and that the markets are due for a correction. Still, others have suggested that the recent surge in crypto prices may be due to speculation and hype rather than genuine demand. Despite these concerns, Pal remains convinced that the bottom is in for the markets and that we are about to see an explosion in the price of crypto and other risk assets. He has pointed to a number of indicators that he believes support his prediction, including rising adoption of cryptocurrencies among institutional investors and the growing use of blockchain technology in various industries. So, what does this mean for investors? For those who believe in Pal's prediction, it may be a good time to consider adding cryptocurrencies and other risk assets to their portfolios. However, it is important to approach these investments with caution and to do your research before making any decisions. Cryptocurrencies are still a relatively new and untested asset class, and their value can be highly volatile. It is also worth noting that investing in cryptocurrencies and other alternative assets is not without risk. While these assets may offer the potential for high returns, they also come with a greater degree of uncertainty and risk than more traditional investments. As always, it is important to diversify your portfolio and to only invest what you can afford to lose. Raoul Pal, a former Goldman Sachs executive and founder of Global Macro Investor, has long believed that risk assets and markets are essentially tied to the monetary cycle. According to him, we are currently at a critical point in that cycle where we are witnessing the greatest outsized reward-to-risk ratio that we will ever see. In this article, we will explore Raoul's views on the monetary cycle, the current state of risk assets and markets, and why he believes that crypto and digital assets are the best vehicle to build wealth and see returns in periods like these. What is the monetary cycle? The monetary cycle refers to the cycle of boom and bust that occurs in the economy as a result of changes in monetary policy. The cycle typically begins with a period of loose monetary policy, where central banks lower interest rates and increase the money supply to stimulate economic growth. This period is characterized by a rise in asset prices, particularly in risk assets such as stocks and real estate. As the economy continues to grow, inflationary pressures build, and central banks begin to tighten monetary policy by raising interest rates and reducing the money supply. This leads to a period of economic contraction, which is typically characterized by a decline in asset prices, particularly in risk assets. The monetary cycle has been a recurring phenomenon in modern economies and has been observed in different forms throughout history. It is important to note that the monetary cycle is not a fixed or predictable phenomenon, and its timing and duration can vary depending on a range of economic and political factors. Current state of risk assets and markets. According to Raoul, we are currently at a critical point in the monetary cycle where we are witnessing the greatest outsized reward-to-risk ratio that we will ever see. He argues that this is due to the fact that we are at the tail end of a long period of loose monetary policy, which has driven up asset prices across the board. Raoul believes that this period of loose monetary policy has created a bubble in risk assets, particularly in stocks and real estate. He argues that these assets are now overvalued and are due for a correction, which could result in significant losses for investors. However, Raoul also believes that there are still opportunities to generate significant returns in the current environment. He argues that investors who are willing to take on more risk can still find attractive investments in emerging markets, commodities, and crypto and digital assets. Why crypto and digital assets? According to Raoul, crypto and digital assets are the best vehicle to build wealth and see returns in periods like these. He argues that these assets offer a unique combination of high risk and high reward, which is particularly attractive in a period where traditional risk assets are overvalued and due for a correction. Raoul also believes that crypto and digital assets are uniquely positioned to benefit from the current macroeconomic environment. He argues that the ongoing global economic uncertainty, combined with the growing adoption of digital technologies, is creating a perfect storm for these assets to flourish. One of the key advantages of crypto and digital assets is that they are not tied to traditional financial systems and are therefore less vulnerable to systemic risks such as inflation or financial crisis. They also offer a high degree of liquidity, which makes them more attractive to investors who are looking to move in and out of positions quickly. Another advantage of crypto and digital assets is that they offer a level of transparency and security that is unmatched by traditional financial systems. The use of blockchain technology ensures that transactions are recorded in a secure and tamper-proof manner, which reduces the risk of fraud or theft. In conclusion, Raoul Pal's perspective on the monetary cycle and the current state of risk assets and markets provides valuable insights for investors looking to navigate the current environment. While traditional risk assets may be overvalued and due for a correction, there are still opportunities to generate significant returns in emerging markets, commodities, and crypto and digital assets. Raoul's belief in the potential of crypto and digital assets to build wealth and see returns in periods like these is particularly interesting. These assets offer a unique combination of high risk and high reward, and are uniquely positioned to benefit from the ongoing global economic uncertainty and growing adoption of digital technologies. As always, it is important for investors to do their own research and exercise caution when investing in any asset class. However, Raoul's insights provide a valuable starting point for those looking to explore new investment opportunities in the current environment. Thank you for watching, and we hope you found this video helpful in your investment journey.